Any president, when they first come in especially, has issues of choice, like things the president wants to do just because the president wants to do them. And I would put restructuring the global trade system, financial system, getting rid of trade deficits with the United States has as that. But then, Harry, you mentioned there are issues that sort of come at you that you wouldn't choose to have to deal with, but you have to deal with.
Before we start the show, please like and subscribe to the podcast. I also invite you to go visit Flux News, Onyx's platform for all things markets, research, for finding more interesting and exciting content. Hello and welcome to Oil Insights. I'm your host, Harry Tchilinguirian, head of research at Onyx Capital Group, and today I'm joined by Robert McNally for a special episode called Decoding Trump. Now, before we start the show, please like and subscribe to the podcast. I invite you to also visit Onyx's LinkedIn and YouTube channels for more interesting and exciting content. Now, Robert McNally is the president and founder of Rapitan Energy Group. Rapitan is an energy and market and policy and geopolitical analysis firm based in the Washington, D.C. area. Rapitan is highly regarded as a consultancy, and it's led by a team of former senior officials and policymakers who have served in top government positions in terms of energy policy, national security, and intelligence areas. Now, Robert has been covering oil markets and geopolitics for a very long time, and amongst his many incarnations, Robert has held senior analytical positions at the Tudor Investment Corporation, analyzing energy markets for Tudor's portfolio managers. He has served also under the George W. Bush administration as special assistant to the president on the National Economic Council and senior director at the National Security Council. Now, private and public sector actors widely rely on Robert and his team's expertise, but I'd like to mention that he has found some time in his busy schedule to impart some of his wisdom in his book called Crude, Volatility, the History and the Future of Boom-Bust Oil Price. Now, this is a book that I highly recommend to read because Robert examines the factors driving volatility in oil prices back from the days of Edwin Drake in Titusville, Pennsylvania to the present day. So essential reading for anyone who wants to understand oil price dynamics. In this episode of Oil Insights, we're going to solicit Robert's insight into understanding the U.S. administration's foreign and domestic policy on various themes. Many observers quickly label President Trump's policies as either erratic or impulsive. As such, it becomes sometimes difficult to understand the end game. And that generates a lot of uncertainty, which then translates into price volatility. So with Robert, we're going to review a number of topics that we've already covered in this podcast and consider them from the perspective of Washington, D.C. So looking at the American angle of things and basically, more importantly, the standpoint of this particular administration rather than our Eurocentric view here in London. So before we kick off, Brent futures were trading at the time of this podcast around $70.50 per barrel, while the 30-day realized volatility on the contract is just under 23%. Good morning, Bob, and thank you for joining us today.
Harry, it's great to be with you. Thanks for having me on.
Great. Bob, I think start right away with a tough topic, and I'd like to talk about Iran. And, President Trump has given guidance on maximum pressure on Iran, but he hasn't given an executive order. And it seems it's the Treasury Secretary, Scott Bessent, that is doing a lot of the difficult and hawkish rhetoric right now in relation to Iran. So I just wanted to get your take in terms of what the U.S. is envisaging in terms of policy relative to Iran, because we haven't yet had any decisive action by the administration versus Iran. And we know that they also have the possibility of recourse to the SHIP Act if they really wanted to start, crippling Iran's oil exports. So what's your take on how the administration is going to proceed with Iran? I know it has a hands full right now with Ukraine, and we're going to talk about that in a little bit. But right now, if we were to focus on Iran, it's circa 1.5, 1.6 million barrels a day of crude oil exports. What do you think is the end game?
Harry, so since last year during the campaign, it was very clear to us that if he won, President Trump was going to prioritize imposing maximum pressure on Iran in order to get its oil sales down to where it was during the first term, or reverse the increase up to 1.5, as you said, under President Biden, as a means to the end. And the end is getting to a deal at least on the nuclear weapons systems, if not the broader set of issues with Iran. Now, what we've seen since taking office is sort of a good cop, bad cop routine in public. And we'll talk about that with Ukraine, I think, as well, where the president plays the good cop. He did sign a memorandum sort of ordering general pressure on Iran. But he's emphasized he wants a deal. He doesn't want to see military action. He sees a big, beautiful deal with Iran. He hopes pressure is not needed. Meanwhile, as you noted, Secretary Bessent plays more the bad cop. We're going to strangle the regime and get the oil sales down. But underneath, there is a quiet campaign to pressure Iran. And that's actually been happening since even last year, Harry. If you look at Chinese imports of Iranian oil, and as we know, China takes just about all of Iran's oil exports now, laundered through Malaysia, but they're down. It's a little lumpy on the monthly data, but they're down. And I think Beijing has been told by the Trump administration, this matters to us. And Beijing has a lot of other fish to fry with the Trump administration. They're enjoying getting discounted Iranian crude and paying in renminbi. Who wouldn't want to do that? But President Trump is saying, look, this really matters to me. And we have other issues. Your access to dollars, EVs, trade, tariffs, et cetera, et cetera. We think, and we actually think the data show, that Beijing has partially accommodated President Trump by reducing its imports from Iran. So where we stand today is, the president reportedly just sent a letter through the UAE to the Iranians, said, look, we want to talk. And we understand there are parts of the Iranian government that want to talk with President Trump. They know they're in a corner, right? The Israelis have set them back militarily and in the region with their proxies. And so there are parts of the Iranian government that are ready to talk with the president, but other parts that are not. And the Iranians can be a bit squirrely to figure out what they're going to do. So we're waiting to see.
I guess that's one way of putting it, because at the end of the day, it seems that the supreme leader of Iran was going on his usual rhetoric that he's not interested in talking with the U.S. and the U.S. cannot be trusted. But I think President Trump has made it fairly clear that he doesn't want regime change in Iran, right? And so, in essence, basically the efforts he's making, either on the diplomatic side or the potential through, obviously, foreign policy through sanctions, all of this is really coming down to getting an ironclad nuclear deal that would certainly appease Israel, and then basically live and let live, and have Iranian oil actually flowing on the market, which then serves another part of his agenda, right?
That's right. In the shorthand for us is, in some ways, Iran is the next $10 to $15 in crude prices. If we see a deal with Iran on the nuclear program, that could include a broader relaxation of sanctions. And not that Iran, we think, can immediately increase its production by too much, at least immediately. But removing that threat would, I think, be bearish for oil. And on the other hand, if coercive diplomacy fails, Harry, I think the risk of a Israeli, if not Israeli-U.S. military attack on the nuclear program is as high as it's ever been. And that would be quite bullish. So what we're telling clients is, one way or the other, it's likely that Iran's nuclear program is going to be set back. The question is whether that's done through a diplomatic deal, which would be crude bearish, or through a military action, which would be crude bullish. But by the end of the year, I'll be surprised if you and I are speaking here a year from now and we're in the status quo, where Iran is inches away from a nuclear weapons breakout capability, and there's neither been a deal nor a military attack.
Yeah, I guess from our perspective, one of the difficult things, in trying to square the Trump foreign policy or economic equation, has been one where you're trying to get lower oil prices in order to reduce inflation through lower energy prices. And this 1.5 million barrels a day of Iranian crude oil exports to be reduced to zero seems a little bit counterintuitive. But I mean, what I'm getting from you, the sense I'm getting, is that President Trump is willing to probably maybe go through a little bit of pain in the short run for the longer term gain. And that is sort of the end game. So if we were to pressure Iran, and assuming that there's no like other OPEC country with spare production capacity willing to step in and fill the gap, well, President Trump is prepared to go through that short-term pain in order to get the longer-term gain, and that is obviously a solution with Iran that is, from a geopolitical risk perspective, one that kind of removes the threat of military action from, or that could be unilateral from Israel. Is that something fair to say?
It is fair, Harry. President Trump or any American president is going to be very concerned about anything that makes oil prices skyrocket. And an Israeli attack on the Iranian nuclear program would do that. So that's the risk to avoid. If you're going to avoid that risk, you're willing to squeeze Iran's oil exports, hoping that Saudi Arabia, UAE, and other countries with some spare capacity will offset. Now, you and I remember Saudi Arabia, the UAE, they were none too pleased in 2018, where they front-loaded production increases ahead of what was supposed to be an imposition of U.S. sanctions on Iran in November of 2018. And Brent had reached $85 a barrel, and then Trump delayed the sanctions, and oil prices collapsed. And that memory is not a pleasant one in the Gulf, I can assure you of that. So I think they may wait to see the barrels leave the market. They'll be a little more cautious about front-loading any offset. But if the market tightens up, I think President Trump is expecting they will add the barrels to keep oil prices from spiking.
Well, we're going to get to OPEC too in the show. So I think in the case of Iran, I mean, what is clear is, okay, you have this good cop, bad cop routine going. And ideally, either through back channels, and who knows, maybe we find Russia being some form of intermediation mechanism with Iran. And you mentioned China as well, because obviously they're linked to Iran through the imports they're taken now, but they're also involved in the U.S. when it comes to tariffs and trade wars. So there's a lot going on there. But at the end of the day, I think the administration would rather avoid having to cripple Iranian exports, but if they have to do it, then that's the path to the longer term gain. So we talked about Russia. We mentioned Ukraine. Obviously, peace in Ukraine would go a long way into deflating any geopolitical risk premium associated with that situation, and it has all sorts of implications in terms of how Russian oil could revert to its traditional markets in Europe, and that's not just crude oil, of course. That's all products like diesel that come back to Europe if some kind of solution is found. What is your take in terms of the progress of President Trump and his administration in basically walking that path to peace, right? So I know most recently we're at the situation whereby we have an agreement, or at least the U.S. has convinced Ukraine of an agreement for ceasefire. They're waiting upon Russia's reaction. And we also seen, obviously, in the past couple of weeks, that unfortunate meeting at the White House in front of cameras where that rare earth mineral deal wasn't signed. And to me, it seems that there's some deliberate action on behalf of the administration whereby this deal was important because it established U.S. economic interests in Ukraine. And that's the best that they could do without actually being militarily involved in Ukraine in terms of support. So maybe that wasn't particularly understood. So is this still part of the process, do you think? It's like we need to sign a minerals deal. We now have a proposition for a ceasefire. The ball's in Putin's court. All these things are moving together. The Europeans are not so involved as they want to, but President Trump is still charging ahead, right?
Right. And I think what's really important, I think, with Ukraine is folks to differentiate between, you use the word ceasefire on the one hand, and then a broader peace agreement on the other. And for energy, in our view, in a ceasefire, there's no meaningful relaxation of energy sanctions. It's more like how the Korean War ended and is still uh, to this day this is the case, right? You stop shooting, you have an armistice line, but you don't relax sanctions and have normal relations. You kind of stare at each other. You can think of Kashmir and Cyprus and other areas. Then there's a peace agreement where the major questions are settled, and part of that you would see a relaxation of sanctions. I think what's on the table now, what Washington sees on the table, is a ceasefire. And the president is trying to compel Ukraine and Russia to agree to a ceasefire, recognizing a peace agreement while President Putin is still in Russia is going to be a long way off. Hard to imagine Ukraine ever formally recognizing the territory Russia has seized, for example. And so what we're after here is a peace agreement. And even in a peace agreement, I don't think you'll see meaningful relaxations of sanctions. Certainly the European ones, like the banning the imports of Russian oil and so forth. So much less the pipeline gas, that resuming. We just don't think that's really on the table here. So now we had a bit of a drama with Ukraine, but that was a messy process of getting the Ukraine to sort of line up with the U.S., which it has. And now the ball's in Russia's court, as Secretary Rubio said yesterday. Now it's up to Russia. And by all accounts, as we sit here today, who knows, things may change by the time this runs, Russia has said niet to a ceasefire. So now I think you're going to see the president divert a little bit from his good cop and go back to supporting these sanctions, particularly yesterday, March 12th. Secondary sanctions went into effect on Russia that had been put in place by President Biden with a wind down period. So I think now you're going to see more pressure on President Putin to get him to agree to a ceasefire so that negotiations could take place, but we're not optimistic those will succeed, and you'll see a broader relaxation of sanctions. That's what's important.
So I'm guessing we're talking a pretty protracted timeline here. And I suppose if the first step is a ceasefire, then ultimately it could take a long time before we actually have a peace agreement. And of course, you mentioned issues around territorial concessions or issues around the security of Ukraine and how that is ensured to the liking of the Ukrainians without offending the Russians. So yeah, there are obviously a number of complicated issues to deal with. But I suppose, I guess in the first instance, I mean, President Trump is obviously a very transactional kind of person, right? So in essence, it's like, all right, get the ceasefire first, then let's talk about the peace deal. And he has, of course, wielded both the stick and carrot in this process, and we've seen requests by Donald Trump to have a look at what possible sanctions could be lifted on Russia, and they often involved entities or individuals. And at the same time, he's also said on March 7th that he was strongly considering large-scale banking sanctions and other tariffs on Russia. So we have a player on each side of the equation here, in terms of trying to nudge Russia in the right direction. So I suppose that it's always difficult because no one could really guess a timeline of these kind of diplomatic engagements and whether they stop, start. I suppose at the end of the day, this is near and dear to the administration's agenda to get it done, right? Because during the campaign, President Trump had promised, obviously, that he wanted to stop sending money abroad, military aid abroad, in particular to Ukraine, and that the sums involved, obviously, could be put to better use for Americans, right? So I think my view is that he's going to keep pushing. And if that means that he has to push unilaterally, maybe to the discontent of the egos of the Europeans, he's still going to do it.
Right. Any president, when they first come in especially, has issues of choice, like things the president wants to do just because the president wants to do them. And I would put restructuring the global trade system and financial system, getting rid of trade deficits that the United States has, as that. But then, Harry, you mentioned there are issues that sort of come at you that you wouldn't choose to have to deal with, but you have to deal with. With President Obama, it was the Great Recession, the Great Financial Crisis. President Trump 1.0, it was Korea. There was a Korean emergency with North Korea. And so now I put Ukraine and Iran in the category of sort of just issues priorities coming at the president. He'd probably prefer not to have to deal with them. He'd probably prefer to deal with the tax bill and trade policy. But he's got to deal with these two things because they threaten to morph into a broader and more disruptive, not only military, but even economic crisis. So he's got to manage those as a priority, and he is. Those are the priorities of the team right now.
Well, the topic of Ukraine is interesting because it kind of brings the topic of Saudi Arabia into play, because the initial talks between the U.S. and Russians, and of course the U.S. and Ukrainian officials, took place in Riyadh, not in Geneva. And so we want to turn over a little bit to Saudi Arabia. And I guess the question, probably on top of a lot of people's minds, is whether or not President Trump could lean on the kingdom, or as he has during his first term. Like, we know that the relations between the U.S. and Saudi Arabia have been deteriorated or strained under the Biden administration. And even before Biden became president, he had a few choice words for Mohammed bin Salman, which obviously did not help the relation as Mr. Biden became president. But now that Mr. Trump is back, and I'm just thinking about his first term, and his first official state visit was to Saudi Arabia. So, I mean, that was in terms of gesture and optics, something pretty important to signal that the partnership was strong. What is your take on the partnership today? What's the relation of a Trump 2.0 administration with Saudi Arabia going to look like?
I think it's even stronger, deeper, and broader than it was in the first term. And the president has a lot of issues that he's working with the Saudis on. He would like to get them back into that Abraham Accords, or get them into the Abraham Accords. They were close just before October 7th, 2023. He would like Saudi help with the Gaza situation and winding down that conflict. And then there's Saudi good offices being used, we see, with Russia and so forth. And as I said, as we discussed earlier, if the squeeze gets put on Iran, Saudi Arabia has that spare production capacity, and he would like to see it used. So there are a lot of priorities the president has that involve Saudi Arabia. I think the relationship, by all accounts, I was there not too long ago. At the same time, actually, Secretary Rubio and National Security Advisor Mike Waltz were there. It's very close, very, very broad and deep. And so far it seems to be very successful. So yeah, it's quite a close. It's hard to overstate really how close I think the United States and Saudi Arabia are at this point under President Trump.
So I think a lot of people look at Saudi Arabia having pivoted somewhat during the Biden administration, obviously having to develop a new relation with Russia, right? As a result of the famous declaration of cooperation that producing countries have signed back in December of 2016, was it? Where you had OPEC countries and non-OPEC countries, formed this entity that everyone knows as OPEC Plus. So the two leaders of that entity are Saudi Arabia and Russia. I mean, de facto, they're the biggest producers. So I think, Saudi obviously has to manage that relationship, and probably sees in that relationship longer term goals, potentially when it comes to gas and its transition according to Mohammed bin Salman's 2030 plan. But at the end of the day, those may be optics that people focus on a little bit more, and probably seeing a wedge between Saudi Arabia and the U.S. From what I understand from you, is that the relationship is as strong as ever, although perhaps it may not be presented in the media necessarily in a way that shows that. So perhaps I'm just thinking back to the maximum pressure policies on Iran, if they are indeed implemented with a view of bringing down Iranian crude oil exports. Well, maybe the Saudis will play it in a way that is, they'll wait to see the barrels leave, and then sort of tell the president, well, okay, well, you need to wait a little bit, then we'll come in. And we could actually even do this within the, within the framework of OPEC Plus, because OPEC Plus is looking to return voluntary cuts it has made back into the market. And, they've caveated the return of these barrels according to market conditions. So market conditions don't necessarily have to be bad. They could be good. So in essence, if they look at their balance, less Iranian oil exports, one could also imagine that they could accelerate the return of barrels to the market. And that could work in a way where the overall optics are favorable to everybody.
You're right, Harry. Of course, the one challenge is Russia is one of the 8 volunteer OPEC plus countries that is returning the barrels, right? Part of that
Yeah.
2.2 million barrel a day cut. Now, what will be interesting is now that the U.S. has imposed those sweeping banking sanctions on Russia, if that starts to trouble Moscow's ability to sell barrels, the question becomes, will Moscow start to oppose continued tapering, let alone any accelerated tapering, right? Then interests could diverge. Moscow could say, wait a minute, it's not fair if Saudi Arabia, UAE, Kazakhstan, other countries get to grow their market share while we are struggling because of U.S. sanctions. That's a wait to see, right? That's down the road. We'll
Yeah.
see if Russia will struggle. But as the U.S. tightens its grip on Russia, as we discussed earlier, to get pressure for the ceasefire, it could lead to some interesting dynamics inside of OPEC Plus with regard to continuing the tapering.
Yeah. I suppose that from a cohesion perspective, it's going to present a lot of challenges, but at the same time, there we look at various countries as you do in terms of how much they overproduce. Some of them are already significantly overproducing their quotas. But even if the return was just on paper, I think that could go a long way in terms of affecting market sentiment.
Right.
So, on the topic of OPEC Plus, I mean, this is something that pops in once in a while, and it's a question mark that people have when it comes to relations with the U.S. and with OPEC Plus. So obviously, President Trump has called upon OPEC and the broader OPEC Plus producer group to help in lowering oil prices. So again, depending on how that call is heated, and it seems to be heated positively, I guess, as OPEC Plus has decided to reinstate production. But let's say if there, take the hypothetical, if there are difficulties, people here often ask themselves as to whether or not we will see the return of the famous NOPEC bill, or the No Oil Producing Export Cartels. It's a bill that has come and gone with bipartisan support. And if it's passed, of course, that kind of affects the immunity of sovereign producers. But my take is that, even if there are difficult relations between this administration and OPEC Plus, then we're basically going to be looking at President Trump not going down that path, especially as a result of what we just said about Saudi. Do you think that the NOPEC bill has any chances of resurfacing here or there, or is that pretty much something that's going to remain on the sidelines?
I think it's probably on the sidelines. You do have Senator Grassley, who is the champion of the NOPEC bill, who's now chairman of the Senate Judiciary Committee. So he could certainly push it at least through committee if he wished. But I think as long as oil prices are soft and softening, NOPEC will be on the background. And as you mentioned, I think the president's well aware that the Saudis and other countries, back for that matter, oil producers with investments in the United States, would be deeply angry if we were to enact the NOPEC bill. And so I think he'll try to keep it at bay. So I think the risks are low. The outlier here, Larry, though, Harry, the outlier scenario is sort of a repeat of what we saw with this JASTA bill, which was a bill that allowed lawsuits against the Saudi government for alleged complicity with 9/11, JASTA. And what happened there was, even though the president, in that case I think it was President Obama, opposed the bill, what happened was it sort of sprung out of nowhere in Congress, quickly passed before opposition could be mounted, and was attached to a must-pass bill that went to President Obama's desk. And so while he did not support it, he could not veto the whole bill. You do it on a must-pass, like a defense bill or a funding
Right.
bill. Okay.
Mm-hmm.
So the
Yeah.
outlier risk, I'll be clear, I don't think this is a high likelihood, but the outlier risk is that Congress sort of slaps this NOPEC bill. They pass it in a day on the floor. It's very popular in Congress. And it comes to the president on a broader bill that he doesn't want to veto. That would be, I think, the main concern, or repeat of the JASTA experience. I don't think it's likely, but it's something you have to keep your eyes open about.
Okay, that was sort of one of those things that it was sort of lurking in the background. And again, because we know that President Trump, in terms of his negotiating tactics, as we've seen relative to Canada and Mexico, in terms of border control, or even relative to the EU, can wield sometimes a big stick, right? And as a result of that, then this any issues with OPEC, the question mark of the NOPEC bill
Right.
comes up. But I think you and I are on the same line. This is not exactly something that the president would like to see him
Right.
do. So,
And
I
I would
mean,
say,
turning
Harry,
to
just if I
yeah,
could, sorry, just one on the optics. It's good to contrast Trump 2.0 with Trump 1.0. You may recall the president was quite active on Twitter in his first term in demanding Saudi Arabia, OPEC, uh, increase supply, reduce prices. He was quite regular.
yes, he
You
was.
mentioned, but in a way, the president's speech to Davos, his virtual speech to Davos, is the exception to the rule that so far he has not mounted a strong public pressure campaign on Saudi Arabia and OPEC Plus to increase production. At Davos, he did. Davos, he said, look, I've got two problems: Ukraine, war, and inflation. And both go away if Saudi Arabia and OPEC Plus would please lower oil prices. He did it once, but since then, I don't think he's done it. And if you
No,
look,
I don't
Secretary
recall.
Wright,
I don't recall. Yeah,
yeah,
you're
yeah,
right.
he said Secretary Wright has expressed happiness. Energy Secretary Wright says they're happy that prices are falling now in the wake of the tapering decision. So it's been a much quieter in the background kind of a conversation with Saudi Arabia so far this term compared to the first term.
Yeah, I could say. Yeah, it's probably true that the number of, well, I guess we don't call them tweets anymore, but the number of
Yeah,
posts on X or on
right.
Truth Social is certainly below the sort of average level that he used to produce on a daily basis. Now, I guess broadening the scope a little bit, and this sort of ties in a lot of things that we talked about. It's one of the things that leaves people a little bit perplexed, and I think we kind of already responded to it, is that there's a lot of things that people see in U.S. foreign policy or economic policy as potentially being bullish the oil price, while there's a promise made to Americans of lower inflation through lower energy prices, and part of getting to that end goal is obviously relying on domestic growth in energy, whether it be gas or crude oil. And you were in Houston just recently for Sarah Week, and you saw the full-throated support of a lot of oil and gas executives for that oil dominance or energy dominance sort of agenda. But at the same time, we have these issues with Iran. We have obviously a new modus operandi between the U.S. and OPEC and Saudi Arabia. So threading that needle is going to be, I guess, a difficult act, right? But not one that's insurmountable, I would say. So in effect, you'd be looking at trying to get the oil price low enough, but not so low that it's going to displease domestic producers at home, because at the end of the day, they have a certain break-even level that needs to be achieved and then above before they start really investing in drilling and so on. While at the same time, and perhaps we are already near that sweet spot in terms of prices at being at $70 Brent, where actually that's a low enough price that should help encourage inflation to come down, and that could certainly help the Fed in terms of its easing policy down the line. What is your overall take in terms of this difficult balancing act between what's being done currently, as we said, maybe a bit of short-term pain for the longer-term gain, and that objective of lower inflation for Americans through lower energy prices?
Yeah, I think the president wants a lot lower crude prices, Harry. His advisor, senior trade advisor, Peter Navarro, recently said $50 a barrel is the target. In my view, that's probably on the high end of what the president would like. Our sense is he would like prices in the $40 to $50 range. Peter Navarro said at $50 a barrel, you'd wipe 1% off of inflation. So I think at the high 60s is still too high for President Trump. Now, you and I know that $50, $45 crude is well below most new well shale oil
No.
break-evens. We're not going to be drill baby drilling at $50 or $45 in oil. I think the administration is willing to take that trade-off. I think Secretary Wright has said, down the road we're going to have break-even prices come down as they improve the regulatory environment. That may be the case down the road. Of course, steel tariffs would make the break-evens go up, so there's moving parts in both directions. But The administration, I think, is willing to take, as you said, some short-term pain to sacrifice some incremental shale oil growth through drilling, and to get that lower inflation. That's the priority. Now, at $40 to $50 a barrel, we're still above operating or completion break even. So it's not like I think you'd see shut-ins of wells necessarily, like we did in 2020. Remember, in 2020, the price of oil dove from 60 to, well, the $20 range, at
Yeah.
one point negative 37, right? We remember in May.
Mm.
And at that point, we had shut-ins of shale. We lost 3 million barrels a day in short order in the U.S. Now, then President Trump, we recall, famously flipped and suddenly became an architect of an OPEC plus deal and convinced Saudi Arabia and Russia to get along and cut production. I think the only time in U.S.
Yeah,
history
yeah.
you've
There was
seen
some legendary phone
a
calls at that
president
time.
call for a cut in OPEC production for higher oil prices. So I think now getting back to Goldilocks, right? $10 a barrel, $20 a barrel, too low. 60, 70, still too high. I think the Goldilocks level for this administration is probably in the $40 to $50 range.
Well, I think at the end of the day, if we assume a $50 sort of sweet spot for the administration, I I don't think that they're necessarily in a super rush. They just need the direction of travel to be right. And as you're saying, eventually, if you loosen the regulatory environment, and who knows, on tariffs on steel and aluminum, or aluminum, as we say in the U.S., right? Uh, if those are brought back down again, then of course that certainly helps in terms of the effort. So this conundrum for a lot of people outside of the U.S. and who are not familiar with the administration's thinking is like, well, how can you do this if you're aiming to do that? But I suppose it's really a question of timeline and what things you want to get done first and what things you could live with. I mean, the president recently was commenting on the economy, and there are a number of people out there in the traditional media that suppose that he has some kind of magic wand, and 30 days into his administration or so, that he could just flip things around. But I think he basically made it clear that they're transitioning from one administration to a different administration, and he has plans, but they don't necessarily happen overnight. And this at the end of the day, this is a process, right? And so that kind of leads me to our last topic of conversation for today, and that's the Strategic Petroleum Reserve. And I think that's a very interesting one because U.S. Energy Secretary Chris Wright said, I think it was on Monday, that he was planning to work with Congress to cancel some of the sales out of the SPR. And at the same time, he was also putting up a pretty big figure for filling the SPR, $20 billion, I think it was, something like that. And I think the last time, well, you were quite close to the action. I mean, last time that the U.S. went on a journey to fill the SPR to its roughly 1 billion barrel a day capacity was under President George W. Bush, and that effort was arrested or stopped as a result of Hurricanes Katrina and Rita that hit the Gulf Coast, and therefore we had emergency stockpile releases. How important is the SPR? Because I mean, it could fill several. There's an element of national security, obviously. There's an element of national pride, but I think also, and this was the case under George W. Bush, there's an element where it's also a means of accommodating producers when they produce more, right? So they're producing more, we're filling the SPR. Part of what you produce extra is going to land in a storage tank and will not be available on the market, but the optics look good in terms of your production numbers, right? To achieving that lower price. So I mean, it could serve multiple purposes. So what's your read on SPR policy? Is this one of the longer term issues? Is it, I mean, do you put this in the top tier of the president's agenda, or is it something that he may look at a little bit more closely, perhaps towards the end of the year or even next year?
I think it's top tier. I mean, the president mentioned filling the SPR to the tippy top during his inaugural address. I mean, that's about as important as you can get. I think SPR could be a Netflix series of drama, Harry. As you mentioned, 20 plus years ago, I oversaw the filling of the SPR for the first time ever to its max capacity, actually just over a little over 700 million barrels. We wanted to get to a billion capacity, but it's just over 700 million. But when shale oil burst onto the scene in 2010, 2011, and U.S. imports began collapsing, bipartisan support for having a full SPR went away. And you had Republicans and Democrats who agreed that the SPR could and would be sold off to pay for non-energy expenses.
I remember that. Yeah.
This. Okay. But the Russia-Ukraine war, I think, reminded folks rudely of the importance of having an emergency supply to offset material disruptions. Although there was no disruption in Russia, it turns out, the fear of one sent gasoline prices to record high levels in 2022. So I say after Russia, there is now a restored support in the Republican Party. I think most Democrats will go along that we need an SPR and we need to refill it. President Biden has spilled about half of it. We need to refill it. So I think Secretary Wright was speaking really on behalf of the president and talking about a priority when he said, yeah, we're going to cancel those sales, the remaining sales that have been put into place, and we're going to refill this at $20 billion plus. Now, it's going to take several years, and it's really unfortunate to have a low reserve as we look at these Iran contingencies we were talking about earlier. That's too bad, but they are going to refill it. Now, small U.S. producers, crude producers, they love the SPR refilling program because they believe it supports their prices and so forth. I think we can all debate that. But it is popular in the oil patch, I would say, but that's not the main reason they're going to do it. The main reason is they now have been they've snapped back to reality. There's a restored bipartisan view that SPR is useful, that the drawdown was irresponsible and needs to be corrected. And I think you're going to see that going forward. The real issue is, will the bond market object to all the expenses, that we're going to need to make to bolster our defense, but also, fill the SPR. So there's a question about affordability, but I think it's going to be remain a top Trump and Trump administration priority.
I think, Bob, the DOE had already set, was it a year ago, 2 years ago, guidelines on, in terms of price levels. I think really for the first time, whenever WTI tended to tread below $70 per barrel, that at the time they had judged that as a relatively attractive price to be buying. So if we're correct in looking at a price target for this administration of, let's say, a TI barrel around $50 for argument's sake, then you have obviously ample budgetary space to be able to do that. Because at the same time, there's a lot of things going on in the U.S. and in terms of fiscal consolidation through the reduction of wasteful spending and fraud, etc., and then all sorts of other restructuring going on, you're going to be able to balance this budgetary conundrum for some, I suppose, and that's at least would prevent the price from going too low. So as you're saying, $10, $20, that's not worth it for producers either at home or abroad. $50, maybe 55. I'd go to 55. I think 55 is a nice number. That's okay. And then the SPR, of course, would help contribute to support that price. And if there is extra volumes flowing from the Middle East, for example, and as was the case under George W. Bush, then those could be accommodated without, causing undue influence in terms of price on the market. So, Bob, that takes us pretty much to the end of this show, except we have one last thing to do together, and that's a famous crystal ball moment that we all enjoy here at Onyx. So, if you had a crystal ball and you had to look into the future and the end of this quarter, and we're now on the sort of knife's edge of $70 per barrel, if you were to take a guess, or an educated guess, as to whether we're going to sustainably be below $70 or above $70 by the end of this quarter, which is pretty much around the corner, what would your crystal ball tell us?
So the end of the quarter is now just a couple weeks away, thankfully. So I don't think we'll be too far away from the current spot price. Harry, I'll go a little bit higher, just a little bit. I think the Russia sanctions are going to start to kick in. I don't hear that Iran talks are getting ready to start. So I think the geopolitical news could get a little more bullish. We've had a nice sell-off on macro, and macro is still pretty awful, I have to say. And with those April 2nd reciprocal tariffs getting ready to start, that's my risk. But I'll cautiously say we're probably a little higher on Brent, over 70 by the end of this quarter. But it's a close call. What you have is bearish macro and bullish geopolitics, really.
I tend to lean about the same way. I think we could trade a dollar either side of 70. In essence, yeah, the macro is not very positive, and at the same time, it's uncertain, and markets hate uncertainty. You could give good news to markets, you could give bad news to markets, then they adapt. When they're uncertain, they don't know on which foot to dance. And I think, unfortunately, in terms of tariff policy, more clarity would certainly help at least people position themselves better. On the other hand, I have the impression that we're in that kind of environment where at the end of last year, trading between 70 and 75 seemed to be something that most people were happy about and were unwilling to necessarily position in a way that we're going to be breaking to a $65 handle, or we're going to be suddenly zooming upwards to $80 and above for some of the more enthusiastic pundits out there. But yeah, so I think, I'm also leaning on the same way. Well, everybody, that's a wrap. Bob, thank you for sharing your valuable insights. And to our audience, thank you for joining us today. But I'd be remiss if I didn't tell you one little thing. Bob is in a bipartisan energy rock band. And this rock band is called Sound Policy. He's also in another band called Pink Noise. And if you're in the DC neighborhood, you should be checking out the bars in that area because Bob is just thrashing it away with a whole bunch of other former officials from the administration. And apparently their Marshall amps go to 11. So if you're in the DC area, Bob's out there playing the classics. Thank you again for sharing your thoughts with us today. Much appreciated, and hopefully we get to talk with you next time. So, sir,
Harry, thank you
have a
very
good
much.
day.
Yeah, thank you very much, Harry. Thank you for honoring me with Old Glory and for this great podcast. Thanks a lot.
Thank you. See you guys all next time. Please like and subscribe to the podcast. I also invite you to go visit Flux News, Onyx's platform for all things markets, research, for finding more interesting and exciting content.